Hey, Blockhead traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions and form your own financial conclusions and make your own financial decisions. Today is Wednesday, October 20th, 2021, and this is Blockhead Traders Weekly. In this week's episode, I'm by myself this week, Sprocket888, and I am here to talk about earnings. Last week, we got kicked off with earnings from the financials, the banks. They were better than expected. In fact, some of them were right out of the park. And this week, a bulk of new earnings start coming up, and so far, they've been quite well. Next week, we have continued earnings, and I thought we'd take a look back at some potential earnings trades that I'll be watching next week to put on. But before we get to that topic of earnings, I'd like to give a plug to the Discord. Find a link in the description below. This episode is being streamed live to that Discord. So follow that link, hop in our Discord, say hello, tell us what you're trading, tell us what you'd like to hear. We'd love to hear from you. You'll also find a link in the description below to thetagang.com/sprocket888, where you can see all of my trades, the good, the bad, and the ugly. But let's hop to this week's episode of earnings. In this week, I went ahead today and screened a couple of plays. I've got some capital to deploy, and earnings can be a lot of fun to play. So I thought I would take a look at what I might want to play next week for earnings. A word of caution that earnings trades are extremely binary events. They will either make or break you overnight. So play with caution and be sure that you know what you're getting into, as these are not the normal slow burn theta trades that I get in. I do occasionally play them when earnings come around because they are fun. You do get to see whether or not your earnings trade will pay off pretty much overnight. So let's take a look at some of the things that I've screened that I will potentially be playing next week. I'm going to keep an eye on them. I've plotted out these plays, and let's talk about them. So just a quick recap, when I go to look at earnings trades to screen, I will screen them in my brokerage. I use Thinkorswim. That's TD Ameritrade is my broker. And what I'll do is I'll search for high volatile stocks. And there is a filter in here where you can basically say, hey, are the earnings coming up? And I specifically look for trades that have earnings in the next, I did 8 days. This way I can see what's actually happening next week, because this is being recorded on October 20th. Yet I wanted to make the plays relevant for next week. And one of the first things that I'm going to start doing is sorting by what's called IV percentile in Thinkorswim. And IV percentile is just looking at the historic volatility and finding which stocks have elevated volatility relative to where they have been. This is different than the absolute volatility, which is also known as implied volatility or volatility index. So just to recap, what that actually is if you have a stock that's extremely volatile all the time, maybe it's always trading around an 80% volatility. If it's at 80%, your IV rank might only be like 30 or 40%, because that might be where that stock normally is. So the IV percentile is looking for those outsized volatility positions. So I love to trade anything over about a 50% volatility, and for the IV percentile, because that means that it's overstretched and there's extra volatility in it. And that's particularly interesting at earnings, because a lot of times as soon as earnings announcements are out, a lot of the mystery is gone and that volatility will disappear. And so I am a short volatility trader, which basically means I short volatility in the trade. I sell volatility because I'm looking to collect the premium as that volatility contracts. So first up is SKX. This is Skechers. And the first thing that I'm going to pull up here is the option chain. And what I'm looking at here is basically kind of seeing where is the premium. You can see the bid and ask spreads are relatively tight. This is after hours, so they're not live. So this is where they closed today. And I'm basically going to probably start looking around a 20 to 30 delta. And I really like this 41 delta. And so that's the trade that I'm going to kind of look at. And so if I take a look at this 41 put, basically I'm selling the 41 put. The stock is currently at 44.15. That's going to net me $1.25 in premium for each contract. My bailout price, the way that I trade is I set my bailout price at 2 times the credit received. So in this case, I'm collecting $1.25, and I will basically allow myself to take a loss double the size that I collected. So that puts my bailout price down here a little bit over $37. And so I will set my position size off of that. I typically like to keep it around $3,000-ish buying power reduction for each of my position sizes. And that puts me in the ballpark here, because at 3 contracts, I'm collecting $375. My buying power at this bailout price, I set my look at my buying power at worst case if I was to push down and have to bail out on the trade. So that buying power is around 3,300. So this puts me pretty much in the range here for this premium selling. So one thing that I've kind of learned to do over the past year or so is I'm starting to try to leverage price action in the setting of these prices to see, hey, where does this fit on the chart? And so let's go ahead and take a look at the chart for Skechers here. What I've got here is I've identified some purple monthly levels. I'm going to zoom in here a little bit on the price action here recently. And so I've already gone through, I've marked monthly levels, I've marked weekly levels, and then this is where the current price is. And so the color codes here are, I set my price. This is the yellow is basically my starting to lose money, but still making money. So this is not max profit, but it's also not losing money. The red here is basically all loss. So if the price comes down here into this red, I am going to be losing money on this trade. And then green is max profit. So remember, when you premium sell, you collect your max profit the day you make the trade. So it's all about, hey, how do you keep this? Now, what I like here is you can see that there is a monthly level. This has already kind of tested this monthly level and been deflected up off this monthly level. And you can see my yellow range is below this monthly level. And then my breakout is even below that. So I really like this setup. I also like the fact that there was this gap up here back in April timing, and we have now filled this gap. And this is a nice setup, in my opinion, for a relatively high probability of keeping all of that premium, as this stock will potentially kind of trail away. Now, it's earnings, so anything can happen and this thing can kind of come back down. However, I do feel that this monthly level of support is likely to hold, or at least if it breaks through, hopefully not kind of break through too far. Now, for the next trade, let's take a look at ATUS. Now, ATUS also has increased historical volatility, and looking at the option change, it's a lower priced underlying, so these option premiums aren't going to be that high, mostly just because the underlying isn't that high. So as a percentage of the underlying, they're pretty good. And so again, I'm going to kind of look in that 20 to 30 delta. In this case, I'm going to gravitate initially here towards these 17s. And so I'm going to go ahead and put the 17s up on the chart. I'm going to mark my my bailout price, my max loss range, and then I'm going to set my position size. Again, I am looking for, around that $3,000 buying power on each of these trades. So in order to get there, I'm basically going to be doing 6 contracts of ATUS at the 17th strike. And that will net me a credit of about $420 on a buying power of about 3,300. So again, I'm coming in here at around 2,900 buying power reduction. So like I mentioned in the last one, let's really see where this charting lines up here for the ATUS play that I'm thinking about putting on. So if we look at the ATUS chart here, what you can see is some interesting things. First of all, if we zoom way out, I'm going to go ahead and flip this thing to a monthly chart. You see that ATUS had slammed down here in 2018 timing, kind of rallied up, slammed down again in 2020 a bit, and recently is now approaching these lows from back in 2018. So I marked the monthly levels on this chart, and now let's kind of zoom in on where we're sitting at today and why I like this trade. So ATUS has been falling like a rock, and this basically has driven up the volatility to high historical levels. Now, interestingly, you'll see right here, we've gotten a little bit of a candle kind of picking up here, just ever so slightly. So what I've charted out here is, again, yellow. This is my not max profit, but still making money. Red is lost territory, and the bottom of the red is where my bailout price is. And so you'll notice that this purple monthly line, which is around the level where this thing was hanging out at its kind of all-time real lows back in 2018 from the previous shot, that is right about at my break-even part. So we got this nice candle up. We got quite a bit of premium in this thing to collect. And if we're pushing down, we haven't quite fallen into this monthly support level. And so the chances and the probability that this thing is going to start adding support and kind of bounce this ticker back up is relatively high. There's quite a bit of ground to cover from where we've fallen. And so this is, again, one of these plays where I am looking for that drop in volatility after earnings to potentially close this thing out and collect a profit while the underlying is staying above my strikes here. So let's take a look at the next one, which is ZEN or Zendesk. So jumping right to the option chain here, I can see that we have pretty good bid-ask spreads again. I'm going to jump in the 20 to 30 delta. I'm going to kind of have to go a little bit higher on this delta, which is a 29 delta. This is about as high of a delta that I like to go. So we're going to collect, around $330. So let's take a look at where this fits on the buying power reduction. So I set my bailout price, which is twice my credit received. And I take a look here at the buying power reduction, and this one is a little bit on the fence for me. And the reason for that is you can see right here, I need about almost a $3,500 buying power reduction, but I'm only collecting $330. Now I don't want to bump this strike up because it's already kind of at my threshold of that 30 delta range. I don't really like to go into the 35 delta unless there's really, really a good bull case for the underlying. So this stock is a little bit of a maybe. We'll have to see how things start shaping up as earnings approach next week. But let's go through the motions and let's take a look at this in the chart. So let's see where this thing fits. So looking over here at the chart of Zendesk, I'm going to go ahead and zoom out a bit. And you're going to see quite a bit of movement up, down, up, down. But where we really zoom in here, and this is where I really like the positioning, but I'm just not sure I'm happy with the buying power reduction. So this is where we're hanging out now. Again, the yellow is kind of my starting to lose, and then red is my losing trade just before the bailout. And the important thing to note here is you can see we've already kind of bounced off. We bounced off a weekly level, which is real close to this monthly level. Now, this monthly level is also happens to be where my break-even point is. And so I really like this trade because you can see my yellow and red box are still positioned with some levels of support before I get to my bailout price. I've got a monthly level that could potentially act as support, and then I have a weekly level that could potentially act as support. Now, the risk is not where I like it to be, or the risk to reward ratio. It's a little bit thin. And this is where you'll have to use your own judgment for your own tolerance. And so this is one I'm going to watch because it very well could come through these levels. And then we're probably coming quite a bit lower because the next monthly level is down here around 91. So again, this could be a quick out trade after earnings, hoping that earnings won't drop below this monthly and weekly box such that the volatility contraction that I get will limit the losses that I will incur in this round. But like I said, earnings are very binary. It's not really a for sure thing. The next stock up that I want to take a look at is Twitter. So if we take a look at Twitter, again, we're going to start in the option chain, and all of these are really November expirations. I didn't call that out earlier, but basically I'm looking for that 30 to 40 days to expiration. I really, really like the liquidity in Twitter here. You can see extremely tight bid-ask spreads. You can see a great range of choices from various deltas kind of going down here. I'm going to go ahead and start relatively aggressively on Twitter and go with the 61 strike, which is about a 29 delta. We're going to throw that in the profit and loss graphs, and you're going to see that I'm going to mark my bailout price and look at my buying power, and we're basically dealing with about 2 contracts of Twitter. Where does that put me from my position sizing? Well, I'm going to be collecting about $428. The buying power at my bailout price is about $3,400. So this is right there in the proper position sizing that I like. So let's hop over then to the chart to see where on the chart this Twitter trade kind of falls with the recent price action. All right, so here we have the Twitter chart. And one real kind of nice thing that I see here is we've got a monthly level here. We got a monthly level here. We've got a little bit of a ping pong in here on the monthly level. So this is where we are now. Now, the one thing I don't super like is I don't like how we're kind of approaching this monthly level already. This could be a point of resistance as we push into this monthly level. However, again, we're playing the short volatility. The volatility in Twitter is extra elevated right now, and after earnings come out, that volatility will evaporate and it will contract. So I like where the colored boxes land here. So again, yellow is profit, but not max profit. Red is loss down to the bottom, which is the bailout price. And you can see both of these boxes are pretty comfortable below this monthly level. Well, this box is kind of in the monthly level. The other interesting thing I really like about this position of these boxes is there's another monthly level down here that is still above my bailout price. This means that this has a very high probability that within the length of time that I'm going to have these contracts, that we will not break through both of these levels to crash. It is highly likely that even if we challenge these levels, we will end up deflecting off and landing somewhere in my green profit zone. So next up, along the lines of Twitter, also very up in the news lately, is Facebook. Facebook is another trade that I'm kind of looking at entering here, potentially. So again, let's hop right to the option chain of Facebook, and you will see that Facebook has excellent liquidity here, very tight bid-ask spreads, lots and lots of choices. I'm probably going to narrow in on about a 325 strike. That is a 31 delta. That is a little aggressive. However, you'll see when I start lining it up in the charts, I really like where that strike falls in the price action charts. So let's take a look at the P&L here. And in the P&L, I'm going to go ahead and set I'm collecting $675 in credit. So I'll set my max loss to double that. And looking at here, and I'm going to take a look at the buying power. Now, this is the part that I do not like about this trade. And a lot of this just has to do with the size of Facebook. Facebook's is a very large underlying. But the buying power needed for this trade is about $8,600. And when you add in my credit of $675, that is still well over my target position sizing. So this is not a trade that I would take that I'm comfortable with. However, I really do like where these levels fall. And the only reason I wouldn't enter this is because I can't make this position size small enough for what I feel comfortable in my given portfolio size. Doesn't mean it's a bad trade. It means it is not the right trade for me and my portfolio size. So let's go ahead and take a look at the Facebook chart to see where this 325 strike lands. So as we look here at the Facebook plot here, you'll notice we got a monthly level up here, which is kind of the all-time high of Facebook. I've marked a couple of weekly levels here on the way down, and I have a monthly level here. For long-term viewers, you might recall an episode just a little bit ago where I was selling puts as Facebook was falling. those puts worked out for me. I rung the register for a profit on those, and basically I was selling the 300 put back then. And what I really like about this particular trade is not so much where these boxes fall relative to the defined levels, but where they fall relative to the recent deflection. So this red line here is the 200-day moving average. And the 200-day moving average offered a lot of support here to Facebook shares as it's kind of bottomed here and is starting to head up. So I don't have a lot of other opportunities. I have one weekly level here below this 200-day moving average. So, this is another area where I'm not super comfortable with the price action here either, because I really like seeing the monthly levels. Those are typically stronger support levels. And in my boxes here, I don't have any opportunity for a monthly level to help me out. The closest monthly is going to be down here at 292. And at these strikes, that's going to be below my bailout price. However, there is a little bit of upward momentum. Again, it's earnings, so it's binary. Anything could really happen. Probably I'm not going to trade Facebook, mostly on the grounds that the position size is just too big for my portfolio. If I could get that position size smaller, or if I had a larger portfolio, I probably would take this trade. Now, the very last trade that I want to look at today, this is a little bit atypical for me. So as you know, I am much more a premium seller, and I like to sell the premium when it is high. Especially around earnings, is a great opportunity to find abnormally high premium. However, I have been owning more and more shares and selling covered calls against them to lower my cost basis. When I'm playing these trades, I'm basically looking for underlyings that are in a bullish movement upward, and I will try to sell calls against those positions where the call skew basically has the premium heavily weighted towards the call side. Historically, I used to like to sell those calls naked, but there was many cases where that underlying would blow through my strikes, and naked calls are the absolute only trade that basically has true unlimited risk. And that is just not a good or comfortable position to be in. So I still wanted to capture all this inflated premium on the call side, but I wanted to do it in a safer manner. And the way that you do that is you basically own the shares that you're going to put the trade up against. And so the next position that I'm looking at here is Lending Club. So it's under the ticker LC. And I'm going to show you what I've arbitrarily picked here to sell, although I don't know if this is the strike that I'll end up going with, and I'll explain that when we look at the price action chart. Now, LC has pretty significant call skew, and we can see this in the Thinkorswim platform. If we happen to look under the Analyze tab, you can go down to the product depth, and you can set the call skew or the call distribution of premium. And what you'll see here is actually it's pretty wide on both the put and the call side, but there is a little bit more height to the call side. And so this is an instance where I want to try to sell calls to basically collect just a little bit extra premium. But what I'm going to want to do is own shares on the other side. And so if I look at an appropriate kind of P&L chart, I'm targeting, around that $3,000 position size. Can't quite, one is a little bit too light. Two is a little bit heavy, but, it's doable here. So as I go after collecting this premium on the call side, because this underlying, and I'm going to show you in the chart, is a little bit in a bullish move, I might just buy the shares now and sell the calls a little bit closer to earnings. Now, I do not want to wait until after earnings to sell the call, because that volatility is going to be highest before they make the earnings announcement. So if I want to get in on getting the most premium out of that, I'm going to want to sell the calls prior to the earnings. So let's go ahead and take a look here at what does LC look like on the chart. So on LC's chart, and all I've done here in this yellow marking is about where I'm considering selling a call, but I really don't know where I'm going to end up selling the call. But what I like about this chart is we started off really high. This thing did nothing but slide, 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 slide. We finally started getting a little bit of a bottom here around 2020. Around the fall of 2020, and then we have just really been picking up from here. And most notably, within this past month, so these are monthly candles that we're looking at here. So this is over a significant period of time. These are monthly candles, but the monthly candles have just pierced this important monthly level. Now, that's super important to me because that means we've cleared previous resistance and we are kind of clear to move up to the next period of resistance or the next monthly swing level, which I've identified here at $80. So the play here is to basically go long the shares here, wait a little bit to see if we can push up closer. When just before earnings come, go ahead and sell a call somewhere probably around a 40 delta. When I'm selling calls on this side, I want to stay kind of close to the money because you're going to get a lot more premium. Plus, those call strikes are already going to be profitable from my initial cost basis. And so what that's just going to do is guarantee the sale at that price plus the premium. So you can stretch your call farther. You'll collect less premium. You'll still make money because your strike, remember, you're selling the strike above where your cost basis is anyway. And so setting the strike, I don't know really where that would be. But I know entering the shares in this time period here is ideal because we're already looking at a level that's close to this previous monthly level. So we could be at the bottom of a new swing up. So these are the plays that I am looking at for this upcoming week. By the launch of this video on Monday, all of these plays should be available to you if you check out this video right at launch. In next week's episode, I will let you know if we've entered any of these, if the opportunity has presented itself. And if I have, we'll keep tabs on them as always to let you know how the trades are working out. If you don't happen to catch any of those episodes, you always can view all of my trades, the good, the bad, and the ugly at thetagang.com/Sprocket888. Good luck out there this week. Have fun. Remember, earnings can be dangerous. They are very binary. You either make it or it breaks it. So good luck out there this week. And remember, think outside the block.